$1.13. That is the precise closing valuation for Strive, Inc., ticker symbol ASST, as of the final bell on Wednesday, November 26th. Because today is Thursday, November 27th, the United States markets are currently closed in observance of the Thanksgiving holiday, meaning this $1.13 figure is locked in until the pre-market session ignites tomorrow morning. While the stock sits motionless on your screen right now, the psychological battleground surrounding this equity is anything but static. We're looking at a company that has undergone a radical identity shift, a metamorphosis that has left many legacy shareholders confused and many new speculators salivating. You see a penny stock hovering just above the $1 compliance line. I see a battleground where the entire corporate strategy has been upended to chase the most volatile asset class on the planet. The tension here, the gap between expectation and reality, is palpable. The expectation from the casual observer is that ASST is still Asset Entities, a small-cap digital marketing firm scraping by on Discord server management and Gen Z content services. That is the old narrative, the expectation that keeps the stock suppressed. The reality, however, is that this entity has effectively hijacked its own ticker to become a leveraged Bitcoin treasury vehicle under the new banner of Strive, Inc. This is no longer just a tech services company. It is a high-beta derivative of the cryptocurrency market, masquerading as a NASDAQ-listed equity. If you are holding this stock thinking you own a social media play, you are fundamentally misunderstanding the asset in your portfolio. If you are buying it as a crypto proxy, you are taking on execution risks that are rarely discussed in the public forums. Let us dissect the immediate market behavior leading into this holiday break. Closing at $1.13 represents a modest daily gain of 1.8% or 2 cents. On the surface, this looks like typical noise for a micro-cap stock. But look closer at the intraday chart from Wednesday. The stock did not just drift, it oscillated with a specific rhythm that mirrors the algorithmic trading patterns often seen in Bitcoin proxies. The volume was not explosive, but it was deliberate. We saw pockets of accumulation near the $1.10 level, creating a temporary floor. This suggests that despite the massive sell-off from its 52-week highs of $13.40, there is a dedicated bid stepping in every time the stock threatens to lose compliance with NASDAQ's $1 requirement. The movement we are seeing now is a consolidation phase, a coiling spring that is waiting for a macro trigger from the crypto markets. When you see a stock trading at 113 after falling from double digits, the natural instinct is to assume the company is dying. But the reality of the volume profile suggests a rotation of the shareholder base. Out with the investors who bought the digital marketing story and in with the speculators betting on the Bitcoin treasury thesis. This rotation creates volatility, it creates friction, and it creates the exact environment where retail investors often get crushed by mistiming their entries. Now, I want you to pause and really look at the chart. That drop from $13.40 to under $2 is not just a correction, it is a capitulation. It represents the market's initial skepticism of the merger and the pivot. But here's the contrarian take that forces you to rethink the bear case. If the market hated the pivot entirely, this stock would be trading at 20 cents, priced purely on the liquidation value of its legacy assets. The fact that it's holding the $1 line, despite the aggressive short selling we will discuss later, implies that the smart money is keeping this option open. They're treating ASST as a call option on Bitcoin adoption. If the corporate treasury strategy works, the upside is nonlinear. If it fails, the downside is zero. This asymmetric risk profile is what is attracting a very specific type of capital right now. Capital that is not afraid of volatility, but is terrified of missing out on the next microcap squeeze. Before we go any further, I want you to pause and really gauge the sentiment of the room because this is a polarizing stock. Comment below with your honest take. Do you think Strive's pivot to a Bitcoin treasury model is a genius move to save the company, or is it a desperate last resort by management to pump the stock price? I want to see how many of you are actually buying the corporate Bitcoin narrative versus how many see this as a red flag. Let's move into the mechanics of why this stock is moving the way it is. We cannot talk about ASST without addressing the elephant in the room: short interest. This is where the awareness part of your due diligence needs to be razor sharp. When a company announces a pivot to crypto or changes its business model drastically, it immediately attracts short sellers who smell desperation. They bet that the execution will fail or that the company will dilute shareholders to fund the new strategy. For ASST, the short data is critical. We are seeing elevated borrow rates, which is the cost short sellers pay to lend the stock. When borrow rates spike, it indicates that the supply of shares available to short is drying up. This doesn't guarantee a squeeze, but it creates a fragile ecosystem. If Bitcoin rallies over the Thanksgiving weekend while the equity markets are closed, those shorts are going to wake up on Friday morning or Monday with a massive liability on their books. They will be trapped. This is the gap risk that makes holding short positions over a holiday weekend in a crypto-linked stock so dangerous. You need to be watching the days to cover ratio. If this metric starts creeping above 3 or 4 days, it means that even a moderate surge in buying volume could force shorts to cover, creating a self-reinforcing feedback loop that drives the price vertically. However, don't just blindly follow the squeeze narrative. You must also look for failure to deliver or FTD data. In stocks like ASST, which have relatively low floats compared to the massive volume spikes they sometimes experience, FTDs can accumulate. This happens when market makers or short sellers sell shares they haven't yet located. If FTDs stack up, it puts pressure on the clearing firms to force buy-ins. This is a technical mechanic, not a fundamental one, but it drives price action just as powerfully as earnings reports. Retail investors often ignore this, focusing on the story of the company while the algos are trading the settlement mechanics. If you are long ASST, you're essentially betting that the pressure on these shorts will break before the company's capital requirements force them to issue more stock. It's a game of chicken between the bulls and the bears, and right now, at $1.13, nobody has blinked. Now, let's peel back the layers on what Strive Inc. actually is today. Expectation: it's a company that manages Discord servers for influencers. Reality: that business, the legacy asset entity's operation, is now arguably just the funding mechanism or the wrapper for the real strategy, accumulating hard assets on the balance sheet. The legacy business provided services for communities on Discord, TikTok, and other platforms. They offered white-label marketing and content creation. While this is a real business with revenue, it is scalable to a point and operates in a fiercely competitive, low-margin environment. It is not the kind of business that typically justifies a $13 stock price or massive investor enthusiasm on its own. That is why the pivot happened. The management likely looked at the balance sheet, looked at the market cap, and realized that to unlock value, they needed a harder asset. By merging with Strive Enterprises and adopting a Bitcoin treasury strategy, they're attempting to mimic the playbook of companies like MicroStrategy, albeit on a micro-cap scale. The thesis here is simple but dangerous. Use equity financing, selling stock, or debt to buy Bitcoin. If Bitcoin goes up, the book value of the company per share goes up, the stock price rises, and they can issue more stock at higher prices to buy more Bitcoin. It's a reflexive loop. The danger, of course, is if the underlying asset crashes. Unlike a software company that can pivot its code, a treasury company holding a volatile asset is at the mercy of the market. If Bitcoin enters a prolonged winter, Strive's book value evaporates, and the stock trades down to the value of its legacy Discord business, which might be pennies. This is why the stock is down so much from its highs. The market is pricing in the execution risk of this strategy. Investors are asking, does this management team have the discipline to hold through volatility? Do they have the capital markets expertise to raise money without death spiraling the stock? These are the questions that define the reality of ASST right now. We must also discuss the retail sentiment landscape because for a stock like this, sentiment is a leading indicator of liquidity. On platforms like X, formerly Twitter and Reddit, the discussion around ASST has shifted from what does this company do to how much BTC do they hold. You'll see users posting screenshots of wallet addresses or speculating on the company's latest acquisitions. This is detective due diligence, and while it can be useful, it's often filled with confirmation bias. You have investors calling for a gamma squeeze or a short ladder attack every time the stock ticks down a cent. You need to filter out this noise. The signal you should be looking for is institutional participation. Are there 13F filings showing that small-cap funds or crypto-focused ETFs are taking positions? If the shareholder base remains entirely retail, the stock will remain volatile and prone to pump-and-dump mechanics. If you start seeing institutional names appear on the registry, that's the validation of the Treasury strategy. That is when the expectation of a legitimate financial vehicle meets the reality of institutional flows. Looking ahead to the future outlook, we're staring at a binary outcome. The future of Strive Inc. is inextricably linked to the regulatory environment for cryptocurrency in the United States and the price performance